Good morning, everybody. Welcome to Pathfinders trainings, and good to see you on a Saturday morning. And one thing I know about you that you are curious about the stock market. Standard disclaimer: stock market is subject to risk. So whatever you do here, do properly because you can actually lose money if you don't take care here. We'll be talking about today how stock market can be taken as a source of income. The key word here is income. What is income? Income is that money which is consistent in terms of amounts and in terms of frequency. For example, your salary is an income, but lottery is not an income. Salary is an income because you get it every month. You know how much you will get and you can plan your spendings based on it. But lottery, even though it promises crores of rupees, you cannot rely on it. Only the money on which you can rely, you can call it as income, and only incomes are capable of running your houses. So stock market, whether you are a fresher or you have been here for many, many years, whether you deal only in stocks or you deal in derivatives, commodity, Forex, the key is over a period of time, have you been able to create incomes here? Until the time you cannot create incomes here, coming to this market is not a very good, experience for many people. So now let's start, guys. So you are here for incomes. That's number one thing to learn. These are the primary human needs. The first human need is financial freedom. What is financial freedom? When you have more money than you require, then you're financially free. Most people, they spend most of their life trying to achieve financial freedom. And more than 90% of the people actually never achieve financial freedom. The second need is peace of mind. Third is health and energy. And the fourth is loving relationships. Your happiness comes from number 2, number 3, and number 4. Unfortunately, number 1 takes all your time, and there is no time left for number 2, number 3, and number 4 to have peace of mind, to have health and energy, and to work on creating loving relationships. That's why it is of extreme importance that you achieve financial freedom as soon as possible. There are 3 equations of money. And out of that, one equation is the equation of financial freedom. What are those 3 equations? These are the 3 equations. Number 1, income minus saving is equal to expense. This is the definition. This is the equation of financial freedom. You earn, you save for your future, and the remaining money you spend. This is the ideal equation. Very few people are into this equation. Ask yourself in which equation you are. Number 2 equation of money, which is very common, is income is equal to expense. Money comes, money goes. As income increases, expenses also increase, and your expenses always rise up to match your incomes. This will help you to lead a good life, but it will never make you financially free, because the moment income stops, then you are in a soup. Number 3 equation, a very dangerous one, is income plus loan is equal to expense. Now, loans are freely available, easily available. Housing loan, credit card loan, car loan, personal loan, gold loan, and there's so many kind of loans. If you are paying any installment of any kind of any loan, you are in equation number 3. And if you are in equation number 3, you are very far away from financial freedom. So your job is to go from 3 to 2 and 2 to 1. If you're already in 1, congratulations. But if you are in 2 or 3, stock market can help you a lot, but not as a lottery. Not as a get-rich-quick scheme. This is where most of the people confuse this market, but coming here properly. So these are the 3 equations of money. You try hard and come into an equation number 1 as fast as possible. This is the biggest enemy of financial freedom. It is inflation. What is inflation? Continuous devaluation in the purchasing power of your money. And there is a mathematical formula for it called rule of 72. What is rule of 72? 72 divided by the rate of inflation is the number of years in which your purchasing power will become half. And you will require double the amount of money just to have the same purchasing power. What is the average inflation in our country? It ranges from 10 to 20% a year, averaging about 15% a year. Don't look at the government figures, look at the realities. Your groceries inflating at more than 15% a year. The children's education inflates more than this. Your cost of travel, your cost of vacations, your medicines, everything is inflating. And at 15% inflation, with the rule of 72, 15 fives are 75, every 5 years, your purchasing power will become half. You will require double the amount of money just to have the same purchasing power. This is a silent killer. I always call inflation is the silent killer of financial freedom. And it affects by power of compounding. Let's see an example. For example, this is the depreciation that happens in the money. Let's go back to 1960s in your grandfather's time. In 1960, let's say you required 100 rupees a month to run your house. Now 100 rupees doesn't look much money, but ask your grandfathers, in 100 rupee at that time, they used to run their houses. If you required 100 rupees in 1960, then in 1965, by the rule of 72, by inflation, you would require 200 rupees a month. In 1970, 400 rupees a month. 1975, 800 rupees a month. 1980, 1600 rupees a month. 1985, 3,200 rupees a month. So this 3,200 rupees a month of 1985 and 100 rupees per month of 1960 is exactly the same money. In 1990, 6,400, 1995, 12,800, 2000, 25,000 rupees a month, 2005, 50,000 rupees a month, 2010, a lakh rupees a month, and in 2015, this year, 2 lakh rupees a month. So 1960, 100 rupees a month, and 2015, 2 lakh rupees a month have exactly the same purchasing power. Your problem is not 1960, your problem is the year 2040. Because this will continue. If you are earning 50,000 rupees a month now, and you are 40 years of age, at the age of 45, you will require 1 lakh rupees a month. At the age of 50, you will require 2 lakh rupees a month. At the age of 55, you will require 4 lakh rupees a month. And at the age of 60, when you will retire without a pension, you will still require 8 lakh rupees a month. And 60 to 85 is 25 more years. The average age of an Indian is till 85. So think carefully how you plan your expenses. Most of the people just put in their money when they think of saving. In equation number 1, what is the equation? Income minus savings is equal to expense. What will make you financially free? Those savings will make you financially free. So it is of utmost importance that you know at what rate those savings are growing. Most people just put their money into FDs or LIC policies. Have you wondered what is the rate of growth that you get there by the power of compounding? Let me give you one more example. Let's say you have a lakh rupees you want to save right now to go towards financial freedom, and you put it in a FD at 9% per year. This is a max you get from a government security. LIC even gives less, 6-7% a year. So here, 9% a year you put in FD. In 2015, in FD, the money become doubles in about 7 years. Rule of 72, 72 divided by 9. In about 7 years, FD become doubles. So in 2022, your money will become double. It will become 2 lakhs. In the year 2029, it will again become double. It will become 4 lakhs. And in 2036, 21 years from now, it will become 8 lakhs. Your 1 lakh will become 8 lakh. You will feel good. But what if this money was growing in your stock portfolio at a very healthy 25% per year? Let's look at the difference it would have made towards your financial freedom. If the money is growing at 25% per year, then that will compound and double every 3 years. 72 divided by 25, that is every 3 years, your money will become double. So 2015, if you put 1 lakh, in 2018, it will become 2 lakhs. In 2021, it will become 4 lakhs. In 2024, it will become 8 lakhs. In 2027, it will become 16 lakhs. In 2030, it will become 32 lakhs. In 2033, it will become 64 lakhs. And in 2036, same year as this one, it will become 1.25 crores. So the rate at which your money is growing is of crucial importance. So you have to make sure you are putting your money, your hard-earned money, in the places where it grows the most. Historically, only 2 places money has grown the most. One is real estate and another is the stock market. Both are good, but real estate is very expensive to start with. And you have to put in a lot of money in the start. If you want to buy real estate of crore rupees, you have to put in crore rupees right at the top. And it's very illiquid. And you cannot buy and sell the real estate in parts. Biggest disadvantage. With the stock, you have that advantage. With the stock, you can, build your portfolios bit by bit, pieces by pieces. And that's where it grows the most. One thing that is very important towards your financial freedom is that at the age of 60, you have at least 1 crore rupees of portfolio, no matter what your current income is, no matter what your current state is. You should work hard toward creating that 1 crore rupees portfolio of stocks, and you should start today. That is what will take you the fastest towards financial freedom. And remember, you do not have any pension now. Pensions are gone, pensions are dead. So, you have to plan. And we Indians, we are responsibility conscious, We take care of our children, we marry our sisters, we take care of our old parents. We help our friends around, and most of the money is spent in taking care of our responsibilities. And for most people, when they are 60, they get a big shock that they don't have enough to survive for the next 20 years. Not only that, after 60, nobody will give you a job. You will be absolutely on your own, and if you have a skill of making money at 60, sitting from home without asking 1 rupee from anybody, won't that be great? That is the attitude with which I always say, come to the stock market. Don't come here for quick money. Come here for steady incomes, and creating incomes takes time. Incomes are not created overnight. You have to take it on the level of a skill. What is a skill? Skill is transfer of knowledge from conscious mind to subconscious mind by practice, practice, and practice. Let's say you are earning 1 lakh rupees a month now. That's your take-home salary. Did you create that skill overnight? No. You first went to a school, then you went to a college, then you did a specialization, then you gave a job interview, got selected, work hard, got your promotions. And that's how now, maybe at the age of 35, you're getting that 1 lakh rupees a month. So you prepared for about 20 years before you could create that income of 1 lakh rupees a month by which your house runs. So think logically. In a market where crores and crores rupees change hand every day, will it be so easy to just go there and earn money? And this is the problem that happens with most of the people. They think stock market is easy money. Stock market is good money, but it is not easy money from any angle. This whole market is based on difference of opinion. Let's say you want to buy Reliance at 980 rupees because you believe that the price of Reliance will go up. 4G of Reliance is coming. You're hopeful that the price of Reliance will go up. And on Monday, you want to buy 200 Reliance. You go there, put your order to buy 200 Reliance, and you get 200 Reliance. You're very happy. I bought my Reliance. But for you to buy 200 Reliance, somebody has to sell you 200 Reliance, right? How about the 200 Reliance that was sold to you by somebody? Isn't that person having exactly the opposite point of view? He believes it will not go up. He believes it will go down. That's why he sold his Reliance to you. So this whole market every day, it is based on difference of opinions. So you can't be right here all the time. You have to understand what is happening here. How will I fit in? How will I learn? And that's when you can come into this market and you can create incomes into this market. And this market has changed now. About 20 years ago, our market was purely stock driven. Today, our market is derivative driven. This is the screenshot from National Stock Exchange. Let's take the latest one. Let me go here. This National Stock Exchange site, if you go to market turnovers, this is the market turnover from their website. Let's have a look at it. Equities, your traditional stocks, there are 2,000 of them roughly listed on the, National Stock Exchange. About 5,000 are listed on the Bombay Stock Exchange. The turnover in 2,000 stocks combined together this Friday, yesterday, was 17,500 crores. But in index futures, just two of them very liquid, Nifty and Bank Nifty, the turnover was 8,790 crores. Something great is happening here, that people are putting more money in the two indexes rather than into the 2,000 stocks. If I go down in stock futures, there are about 150 of them allowed on the National Stock Exchange. The turnover on that was 25,000 crores, almost more than 1.5 times the turnover in the 2,000 stocks. Then we have options, which are also very high value turnovers. We have currency futures. 4 of them are allowed in the Indian market now. Most liquid is the USD INR pair. And the turnover in them in a single day was 6,429 crore. And there's a commodity market, not traded here. Traded on MCX and CDX, where also there is a huge turnover every day. So out of the total turnover that is happening every day, only 15-20% of the money is flowing in stocks now. 80% of the money every day flows in the derivative market, guys. And that's why you have to understand this from a different perspective. Most of the people are either absolutely new, know nothing, or they only know stocks. They think if you go to the stock market, you buy stocks and you keep on holding them, eventually they will go up. Doesn't work this way. In fact, that's how people come to the stock market. Husband, trading for the old days stocks, doesn't know the short side of the market. 3:30 the market closes, husband comes home. Just by looking at the face of the husband, the wife can tell whether the market went up or the market went down. This is what happens when you are stock dependent. If you want to enter the stock market now, you will have to understand the derivative market. And derivative market is a very old market. In the stocks, it came in 1910s and 1920s, and in commodities, it exists for 400 years. In India, it was introduced in 2001, and after that, stocks gradually lost their importance, and most money now flows into the derivative market here. So you have to understand the stock from an entirely different perspective. And please also note, stock market is neither taught in our schools, it is not taught in our colleges. There are no reputed institutes around teaching stock market. And most of the people end up learning from a broker or from book or from YouTube videos, or they are trading tips. Most people are dependent on others. This is a big problem. Most people think that somebody else is supposed to make me rich here. Nobody will make you rich here. That's the problem. What is the whole problem? The whole problem is, in other places, when you put your money, there is a responsibility. You put your money at 9% in FD, the bank gives you a piece of paper guaranteeing you your 9% a year. You put your money into LIC money back, give you a premium, you get a guarantee. But when you come to the stock market and you buy a Tata Motors 500 stocks, has anybody of you ever got a piece of paper guaranteeing you 20% a year? And the answer would be no. There would be no yes here, because it is not possible. Mechanisms are different. When you go to the debt market, which is the FDs and the bonds, the mechanism of making profits, a fixed one, is at the start itself. You buy and you are guaranteed of a profit. Not a big one, but you are guaranteed. But when you come to the stock market, the mechanism is entirely different. Buying does not guarantee you any profit. You have to buy and then you have to sell. And if you are not able to sell and it goes down, your profit will go away. So here in this market, there is an entry and there is an exit. Only when you sell your stock will you realize your profit or your loss. And this is one thing people miss, and they think somebody else is supposed to make me rich. Not only that, here in this market, nobody is responsible for your profits. When you open a trading account, a demat account, buy a mutual fund, give money for a PMS, don't you sign there at many places that if a loss happens, only you would be responsible for it? Correct? So when you yourself sign that you don't expect any profits, if loss happens, you're responsible for it. Tell me, why would somebody be under pressure to give you profits? And that's why the tip shops are going on, all those taking money things are going on. Why not take control in your own hand? Why not become educated yourself? Why not learn it yourself? You have learned so many things in life. There's one more thing to be learned, from being dependent on others, learn how to become independent. And these are the 5 things you should know if you are coming into this market. Number 1, you should know how to make money with intraday trading. There's a lot of money in intraday trading. But intraday trading is not done through stocks. Intraday trading is mostly done through the derivative market. Because derivative market, you can make money whether the price is going up or the price is going down here. Let me show you with an example. If you go on our website here, this is my website, pathfinderstrainings.com. Go there and you can see software. In our trading zone, every day, we put the best trade of the day. This is the trade of the day. This is the trader who has made the most money on the day based on the things that I have taught him. So this is the best trade of the day of yesterday, 7th of August, a profit of 17,630 rupees. Only publish it on the website here. Let's look at this trade here. Now, this is a profit of 17,000 rupees, out of which a profit of 5,840 was in Union Bank short. And mind you, Union Bank was not going up. Union Bank came down from 216 to about 206, and 11,790 rupees was made in Siemens futures and Siemens put options. Now, this is a derivative market, entirely new market that you need to understand, and these are the possibilities. How much is the capital required? The capital required in all these trades was not more than 1 lakh of rupees. So if I take it here, I'm talking of 15% in a single day. These are the possibilities of this market. If you go, and you can go on and on here. Let me open on the sheet here. This is A profit of, 17,000 rupees here. Profit of 7,800 rupees. This is Kotak Bank futures. 4,800 rupees of profit in a day. 10,700 rupees of profit. Trading Arvind futures and Bharat Forge futures. This is the kind of money that is available in intraday. But then there is a negative side also. Let's see another example live here. This is the market on Friday, yesterday. Went down by about 24 points on Nifty and 61 points on the Sensex. And here, at this point here, we see the stock that went up the most was ONGC 4%, and that went down the most was BHAIL 5.77%. By default, people will assume on Friday, BHAIL was a bad stock. You would have lost a lot of money in BHAIL. It would have been great if I was in ONGC. But could BHAIL have given you money yesterday? Yes, BHAIL could have given you money. I have put it here. Let's say, let me make a market watch. Let's go here, and I go to BHAIL. The stock, which was down by about 5.77%. But if I go to the derivative market in the same BHAIL, and I look at a 260 put option. Put option gives you money when the price goes down, and call option gives you money when the price goes up. And you see, in the put option, in a single day, it went up by 185%. So let me open the two charts. If I look at the chart of BHAIL here, see, this was here. BHAIL went down by about 5.5%. But on the same day, if I open the BHAIL put option, it will be, this chart is not opening, it is up about 8%. Then I look at another one, let's say, add a script here, and I look at 280 put, various strike prices. 280 put was up by about 123%. This is what it is. So, let's see, this is the one. It was up. Right from 9 rupees in the morning, it achieved a high of 29. In fact, it was up about 300% if you would have timed it well. So this is the market that can be a great market to be a part of. This is the, and if you felt ONGC was great, about 5%, 4.3% up, let's go in the same ONGC now. ONGC. Now, this is the kind of money you're not used to because you have never traded this. You think it is only stocks. Stocks also serve a purpose. I'll tell you that. But get comfortable with the derivative market. Now, ONGC, if I go to ONGC and I go here in ONGC, and let's say again go to the puts of ONGC, a call of ONGC this time, and I look at 280 call of ONGC, it was up by 98%. Now you might be feeling, oh, this is the only thing worth doing. Let me not do anything and let me go calls, puts, that's all I'll do. But then there is the other side also where you can lose your shot. Let's say in the same ONGC, if I, instead of a call, I was into a put of ONGC of 280, what the result would have been? The result would have been, instead of making 98%, you would have lost 50%. And you know what is your biggest challenge? Your biggest challenge is money is not made in the past. Money would always be made in the future. Let's say I open this ONGC here, and let's say the market has opened at 9:15 now, and you open the two charts. You a chart of NGs and you also open the chart of BHEL. Let's open two charts side by side. दोनों चार्ट को साथ में खोलता हूं. Let me open both charts side by side and let me show you the dilemma, the biggest dilemma. It's very easy to show a rose picture, but mind you, the one other big problem with the stock market is the loss part. Those who don't become comfortable with losses never make money in this market. Never ever. Let's see here. If I get this one here now at this point, and I also open it. Now, this is BHEL here in the morning, and this one is the ONGC in the morning, and that's how they look in the morning. How do you know? You'll have to take your decision now. At 9:20 in the morning, you have to take your decision. How do you know which one to go long on and which one to go short on? And that is where the skill part comes in. You cannot make money in the past. You have to make money in the future that has not yet arrived. And that's why those tip shops are thriving, because they are giving you hopes. I know where it will go. Well, why don't you learn yourself where it is likely to go? It is a learnable skill. It is a learnable skill. So, this is number one. You have to learn to make money with intraday trading by using, few hours or a few days of trading by using the intraday and the swing by catching the swings. Now, number three, extremely important, is you should know how to build and manage your own portfolio. The moment I use the word portfolio, most of the people think Tata, Bata, Reliance, blue chips. They think portfolios are made with blue chips. You're supposed to give money to some fund manager who will, manage it for you. This is not for me. Oh, it's for you. You should have the skill of creating wealth yourself. In long term, wealth is created not from derivative market. In the long term, wealth is created from stocks, your humble stocks. And stocks, when you buy a stock, basically, what are you buying? You're buying a business. When you buy a Tata, Bata, Reliance, you're buying a Lupin, you're buying a business. You're part owner in that company. And when you buy a business, shouldn't you evaluate that business? Shouldn't you have the necessary skill to evaluate that business, whether it is a good business or whether it is a bad business? All the 6,000 companies listed on BSE and NSE, each one of them is a business. And if you just buy, some businesses are good businesses, some businesses are bad businesses. And most people think portfolios are built with large caps. No, most wealth is created with small caps and mid caps. But if you know how to find that. Many of you have heard the name Chaman Lal Sethia. Have you heard the name Chaman Lal Sethia? No. Let me show you a Chaman Lal Sethia. A company listed on the Bombay Stock Exchange here. This is Chaman Lal Sethia. We identified this company somewhere around at 32 rupees, more than a year ago. And if you look at Chaman Lal Sethia now, look at the company. It has already gone from 64 rupees, and 30 rupees here up to 160 rupees. In how much time? In just about 2 years. This is the kind of companies that you need for you. Don't buy it now. The move is gone. But this is the kind of companies you require for your portfolios. This is the companies you don't want the Infosys today. You want the company that is unknown now, which in 10 years will become the next Infosys, which in 10 years will become the next Reliance. In the next few years, which will go and become a Ranbaxy or a These companies are always available. Good business is always available. Let's look at one more. You know this name, Blue Dart. Let's look at Blue Dart here. This is Blue Dart, guys. From 475, it is now at 7,191. These are the kind of companies that should be in your portfolios. But then there are negative sides also. If I put a different company, let's say Suzlon, let's look at this. The stock has gone from 450 to 25 rupees now. Kingfisher has become zero. Big names, JP Associates. Look at JP Associates, a very big company. From 350, it has gone to 11 rupees now. So you have to know stock picking. Stock picking is the key. If you have to build a portfolio, stock picking is the key. And those portfolios can be built. They can very easily build if you know how to do that. Let me show you a few sample portfolios here of some of our traders here. This is a portfolio. This is a 3,65,000 rupees of money which has gone and become 11,87,000, giving a profit of about 8 lakh rupees. This is a portfolio. This is a 1,78,000 rupees portfolio which gone up and become 10,97,000, giving almost 800% profits. And remaining are also like this, and there are many others. And these people were not rocket scientists. They were not portfolio managers. This is a common man who is making these portfolios, who has learned the art of stock picking. Guys, if my voice is choppy, don't worry. If you're on a slow connection, you might hear me bad, but I'll be sending you a recording of this session. So you can listen to it as many times as you want. And even if you want, you can pass it on to your friends. Absolutely okay. So here, this is portfolio. So why not start working on that portfolio now? Your crore portfolio would be great if at the age of 60, you more than a few crores in your portfolio, even if you have nothing right now. But for that, you have to start working now. You have to put your money into stocks that are growing. And you also need to time them. That is very important. For example, everything doesn't go up. Let me give you another example. Let's say a stock like RS Software. This is the back end of Visa. Let's say this is a company that went up from 80 rupees, went up till 400 rupees. And after that, it came down. So how do you catch it here? And how do you get out here? Because buying will not guarantee you profit. Selling will guarantee you the profit. So when you are building portfolios, it is not buy and hold. Most people think portfolio building is buy and hold. No, you not only have to pick the stock right, you also have to time it right. You have to buy it when it is cheap, sell it when it becomes a little expensive, wait for it to correct. When it again becomes attractive, you again buy it and you again, ride the uptrend. The limitation in a stock is, in stock you lose money when the price goes down. So you have to make sure you are up only in the uptrend and you are down, you're out when it is in the downtrend. So you have to learn to build and manage your own portfolios, leverage assets like commodities, options, Forex, different kind of markets, stock futures, index futures, and most importantly, to make money when the price goes down. This is where the real fun part is. In the last 2-3 days, we have made a lot of money with Siemens. And let's do the chart of Siemens. This is Siemens here. And Siemens, last 2 days we made very good money. We even caught this move here. I cannot make this money from stocks. I can only make it from the derivative market. And why? because Siemens has given an ordinary result, and fundamentally its P's have become so expensive that the uptrend is unsustainable now, and correction will happen. Correction happens in all kind of stocks here, and this move from here to here, if you see, in just 2 days, that's the chart I was showing you. In just 2 days, this move from here to here, this is a lot size of 250. From here to here, this is a 50 rupees move. A 10 rupees move is 2,000, is a 2,500 rupees. So this move from here to here is a 12,500 rupees of move in about 60,000 rupees of capital. So you have to learn how to identify the long and the short side of the market. And both sides money is there, but not by being dependent on others. Those who are giving you tips, ask them back, guy, if your tips are so good, why don't you sit at your home, trade your own tips, and become rich? Those who says, give me your money, I'll manage it for you. Ask him, if you're so good at managing money, why don't you manage your own money and make money yourself? Why do you want my money? 12 years into this market, one thing I know, those who know how to make money, they don't require your money. And those who are asking you for your money or promising they will make money for you, maybe they don't know it. So just be careful. It is your hard-earned money, guys. Let me introduce myself in brief, guys. My name is Yogeshwar Vashishtha. I'm a civil engineer by profession. I've done my M-Tech from IIT. My advanced courses in trading from, Online Trading Academy of USA and Pristine Academy. I'm a professional trader and a trading coach. This is what I do for a living. I've also done international certification in management from Peru. My father is a scientist, and in our house there was not an environment of stock market. In fact, when I was going for my IIT, my father advised me, he said, son, try and stay away from 3 things: smoking, drinking, and stock markets. And I said, what is stock market? He said, if you don't know, even better. Most people go there and gamble. In fact, that's how most of the people still perceive the stock market. It is a gambling place. Contrary to that, stock market is where, the wealth of the nations is created. This is where the money goes to the entrepreneur who builds there would have been no Microsoft, there would have been no Facebook, there would have been no Siemens, there would have been no Reliance, there would have been no TCS, there would have been no big companies if there was not a stock market where people could give money to them to build their company. But I didn't know that. So I did my M-Tech from IIT. I was a scientist in CBRI for a few years. Then I went out of India, became an NRI. Many years, I used to work for this company called Skanska, a Swedish multinational. I made hydropower projects in Sri Lanka, in Sweden, and my last project was in Peru in South America, where I made the Yunkan hydropower project. When I was in Sri Lanka making the Kukaleganga hydropower project, I came in touch with a Swedish trader. His name was Jeffrey. He was the one who introduced me to this market. And he was kind enough to allow me to see his trades. And if somebody can show you his trades, that is the best way to learn the stock market. 3 days I was sitting with him. He was trading in front of me, mostly the derivative market, sometimes the stocks. And in 3 days, he made more money than I made in a whole month. Was he right all the time? Answer was surprisingly no. Out of 10 trades, he was wrong in almost 4. Success rate of about 60-65%. But his key was very simple. He told me the lesson that I never forget. He said, son, stock market is a business. And when you do a business, you never ever take a big loss. The key to doing any business is that there are 4 possibilities in any business. You can have a big loss, you can have a small loss, you can have a small profit, and you can have a big profit. You never ever take a big loss. If you don't take a big loss, small losses, small profits will cancel each other, and you can concentrate on focus on getting big profits. I never forgot this lesson. And this was my start. And I started the stock market out of curiosity, trying to have a second source of income. Then from there, I went to Peru. I was in, making the Yungan hydropower project. I got fascinated with this business. I said, what a business here. Do anything else, you have to meet customers. In a job, you have to go to the office. This is a business of freedom. Whatever time I was spending in this market was pure thrill, and it was challenging my intellect to the core. I had to read so much. I had to, so then when I was in Peru making the Yungan hydropower, I had the chance to learn from Pristine, one of the best trading schools you can learn from. Trained under them, and it changed my life. I started trading actively, and by 2006 end, I was doing well. I was making good money. I was right 60% of the time, sticking to the base principle, and started toying with the idea of taking it as a full-time career. It was giving me so much happiness. Talk to my parents, talk to my wife. I had enough savings on the back. I could have taken that risk. So 2007, January, February, when my project finished in Peru, South America, I was transferred to Scotland, my next project. But I decided to take a break and come back to India with my family. When I came to India, we were into a booming bull market. 2007 was a bull market. Everybody was into the stock market, and making money was simple here. Even with simple moving averages, you could make money into this market. Everybody had gone crazy in this. So, I started working on it. It was pretty easy. Then came 2007 and there was this Reliance Power IPO, after which no power was left into the market. Our market crashed, biggest crash that we had seen. Many people lost money. 2008 was my best year, because I have stayed in the derivative market on the short side, so I could make pretty good money in 2008. And that's what gave me a lot of confidence about this market, that this can be taken as a business. You can make money whether the price is going up. You can make money whether the price is going down. So, I became more fascinated with it. Satyam, most people have bad memories of Satyam. I love Satyam. I love Raju. Why? Made a lot of money in that. 5 days before the scam happened, I was analyzing a chart of Satyam, and I saw a divergence on a technical chart, and looked like a shorting opportunity. I didn't knew a scam was going to come. So, about 4 rupees was the premium of the put. My target was about 8-9 rupees. And option, as you know, is a limited risk product. And I took my option and I was holding my option. On the day of the scam, I was not in my office. I was out. My office executive gave me a call and said, Satyam has crashed. And that was music to my ears, because in a put, you make money when the price goes down. I asked him, how much has my put become now? And he said, sir, your 4 rupee put now is 104 rupees. Did I book it immediately? No. A trader is always in a hurry to book his loss, but never in a hurry to book his profit. So I said, put a stop loss at about 95. Then we kept on trailing. By the end of the day, I finished at about 110 rupees. And this kind of money is available today also. I just showed you in BHALE. When BHALE went down about 6% yesterday, the BHALE option in a single day went up 170%. It's there in front of you. So this money was always available. This money is still available. Then came 2009, and I again, started making money. So I had seen 3 cycles: a bull run, a bear run, and a bull run. I said, if you can manage 3 cycles of a stock market, you become fit for it. So 2009, I started, this is what I'm going to do for a living. This is what gives me the maximum happiness. My family was also very happy, because in this business, you don't have to put in a lot of time. You have all the time for your wife, for your children, for yourself. You can develop hobbies. No travel required. You never have to sell anything to anybody. Look at the business. You don't have to open at your, you don't have to open an office. You don't have to hire any employees. You don't have to give any service to anybody. You don't have to manufacture anything. You will never meet a single customer in your whole life. You buy on the exchange, you sell on the exchange. You can make money whether the price of your stock is going up or the price of your stock is going down. You can choose how much time you want to put in here. You can do it part-time very easily. You can keep on doing your job. You can keep on doing your business and you can still be in the stock market. And there is no retirement here. You can do it till 90. You can be in a hospital, leg in a string, and you can still trade the market. What a business. That's what fascinated me. Then in 2009, to enhance my learnings further, I started mentoring students. I stay in Mumbai, in Hiranandani Meadows, and I started mentoring students. And my style is very simple. I live trade the market. I teach live and I trade live money in front of my students. That somehow caught people's fancy. In 2009, 2010, I trained about 2,000 people in Mumbai. Then when international company, Online Trading Academy, they came to India. They were looking for a consultant. Somebody recommended my name. And I thought this is a great opportunity to learn from international level traders. I said yes. And I became part of this international group of traders. I became part of this international group of traders. Fantastic, amazing traders, brilliant traders, and gentlemen and fantastic people. So almost from October 2010 till August 2012, I was with this group, learned a lot from them. During this time, I used to travel in Mumbai and all over India, and I used to take introductory workshops like this for various students, train about 20,000 people. And that was a great insight for me into the stock market. And I also knew there was a huge need for mentoring. So 2012, August, I started toying with the idea of creating a mentoring model of my own. Took a 4 or 5 months break. I said thank you to this group, came back to Mumbai, took a 3 or 4 months break and started creating a mentoring model of my own. And in December 2012, I created a mentoring model and took my first batch of about 32 students. Since then, in my main workshops, more than 1,000 people have been trained. And in introductories like this, physical and online, more than 7,000 people have been trained. This is my company, pathfindertrainings.com. And here we, train and mentor and coach people. We don't handle anybody's money. We don't give tips to anybody. We just teach you how to trade intraday swing with derivative market. And I teach you how you can yourself build your 1 crore rupee portfolio without giving a single rupee to anybody. How to identify your own Chamanlal, how to identify your own blue dot, and how to get out if you are stuck in a stock which has started going down. I teach that into my classes. By the way, this workshop, I also conduct, physical workshops in Mumbai. So one of them I have recorded. Those who want to see me live, this is one of my recorded session, which I took in Andheri about a year ago. So, and this is about a 3-hour workshop. So those who want to listen to me live, physically, you can go on my website and full workshop is available there. But it's the same content as you have. But if you want to listen to me, you can go there. This is a big myth, investment myth. It says I have to think, I have to buy nice, good blue chip companies, hold them over a long period of time because over a period of time, everything goes up. That's not true. But the myth continues. Why people don't know. Let's see if that is true. This from 2003 onwards till now, till 2015, about 12 years of our market, we are in a structured bull run. See, the market has been continuously going up from 1,000 rupees. It is now at 8,500 rupees. It has gone up by about 800%. So by this logic, all blue chips should be up. All large caps should be up. Not even one should be down. Let's see if that is true. Suzlon, in the same year, went down from 490 rupees to 23 rupees. But Thermex in the same period went from 100 rupees to 1,006. It went up 10 times. Why? Why did that happen? Because Suzlon is a loss-making company and Thermax is a profit-making company. Not only that, Suzlon had bad management, did bad decisions of business. This is Anuvaga's company. She brilliantly handled, and what a company. Husband died, son died. Went for a 10-day course to Vipassana, sat in silence for 10 days, came out, gave a crore rupee in donation, and rebuilt her company from scratch. Today, Thermax is an international company, Pune-based engineering company. So but how do you know 10 years ago whether to put money in Suzlon or to put money in Thermax? Because that time Thermax was not a known name, but Suzlon was a very unknown name. Known name here. Reliance. Biggest of the names, it has got further down now. Now about at 970, this is an old chart. How much money has this big name given you in the last 7 years? Nothing. You've lost money actually. And think, if you are, if you were into this company, you would have lost money. If you were in some other company like Thermax, if you were in some other company like Blue Dart, how much that money would have grown? So how important is stock picking? It is extremely important. So you not only lose money, you also lose opportunity. That's why extremely important. Now this Yes Bank went up. Rana's Bank, what a performance. It has gone from 50 rupees to about 800 rupees now. But Arcom went down. This is a big name. This has went down. Why? It didn't perform. In the short term, this market is governed by Greece, China, emotions. But in the long term, this market is governed only by performance. So you have to learn how to find a performing company and how to find a non-performing company. Because that is what would give you money into this market in short term and in long term here. So, idea moved up. They asked, where can I learn technical analysis, fundamental reading, balance sheet? I'll teach you guys. I'll be telling you about our mentoring programs. But let's learn this first. Let's understand where the problem lies, and then you can find your solution. No dependency on others. Be the king here. Sher banna hai to idhar bano. Idea went up. DLF went down. NBCC went down. Kingfisher down, and you will find opportunities. We found a great opportunity about 6 months ago in just that. Let me give you that example. My friend has asked, let me give an example. Let's say this is Just Dial. Somewhere here. This is where Just Dial at about 1800 rupees become a very expensive company. It started touching the P valuations of about 100, 500. It was not growing at that rate. They became a big mismatch between fundamental and technical. I did my analysis and I saw the fair value at the current business model of Just Dial is about 600 rupees. And it takes a lot of guts to say the stock is at 1770, the fair value is 600. That's where it will go to the long term. So we started shorting Just Dial about 6 months ago, and a lot size of 125. Market is going up. What has happened to Just Dial? Because the business did not perform, it is already down from 1800 rupees to 1048 rupees. For people owning the stock, they would have lost money. People who knew the derivative market, there is money in this stock every day. So you have to learn. It's a great place. And mind you guys, I'm not from a stock market. I'm an engineer. If I can do it, if I can learn it, everybody of you can learn it. That's one thing I say very openly. Learn it. Take control of your financial freedom in your own and अपने हाथ में ले लो. Come on. दूसरों को बोलो मैं तुमको नहीं देने वाला हूं, मैं ही करूंगा, पर सीख के करूंगा, जुआ नहीं खेलूंगा. Don't come and gamble here. Many people say, I'm afraid of derivatives, I'm afraid of the stock market. Fear is absence of skill. Please remember, fear is absence of skill. When you go to a swimming pool, if you do not know how to swim and somebody throws you in the swimming pool, you will have utmost fear. But if you are a skilled swimmer, you will yourself jump into that swimming pool and enjoy swimming. Create the necessary skill and the money will follow. Create the necessary skill and the money will follow. Don't follow money, create skill. There's so much money into this market that those who skill, this is an 80-20 market. 20% of the people will always make money. 80% of the people will lose money here. Ask yourself, which one do I want to belong to? Do I want to be part of the 80% or the 20%? You have come into this webinar of mine. You have shown eagerness, but that is not enough. You'll have to take the next step and learn it. And stock market cannot be learned in 2 hours, 3 hours. It requires at least about 3 months before you will start creating those necessary skills. I have those models I'll be telling you about. BHEL is down. Siemens is up. Tata Steel is down. What a big name. And now it is down till about 250 rupees. Analyst Steel is up. JPS is down. L&T is up. Unitech is down. Prestige is up. This is Financial Technologies. TCS is up. So, and another thing, 7 rupees stock is not cheap and 700 rupees stock is not expensive. This is also very important. You have to learn how to evaluate a company. The price of one stock has nothing to do with the price of another stock. Everybody is a trader and an investor. You're either an intraday trader, swing trader, positional trader, or long-term trader. Intraday and swing traders mostly work on the derivative market. And it can create short-term incomes in good amount. What is a reasonable expectation when you are managing your portfolios, when you're learning how to build your portfolio should be growing at about 25 to 50% a year. That's a good growth rate of a portfolio. That way you will reach towards your financial freedom fast. And not only that, when you are building portfolios, you not only get growth in stocks as they grow in business, you also get bonuses, you get splits, you get dividends. But that is done mostly by positional trading and long-term trading. With intraday and swing, you can create the necessary money by which you can build your portfolios. Very simple strategy. Trading facts with anybody can become a trader with proper practice. Don't be a dependent investor, become an independent trader. You can trade stocks. Let me tell you the choices you have. You can trade stocks. Stocks are primarily used to catch long-term swings and to build portfolios. You can make money in this only when the price is going up. So you have to have the skill of getting in at the low price and getting out at the high price. You can trade stock futures. Stock futures are bi-directional products. You can make money in them when the price is going up. You can also make money in them when the price is going down. They're discounted. You get 80% discount in them, and you have to specify what direction you are buying. If you specify I'm buying up direction, you will make money only when the price goes up. If you specify I'm buying the down direction, you will make money only when the price goes down. So here, once you know stock futures, you're no more dependent on the direction of the market. You can make money in both the directions. You can index futures, fees, bank nifties, amazing products. A nifty costs just about 20,000 rupees. 100-point nifty move is about 2,500 rupees. Making on a lakh rupees, 2,000-3,000 rupees in a day is very easy in both the sides. In bank nifty, making about 5,000 rupees in a day is not very difficult. And if you have necessary skill, you can make money in that every day. Now, you can trade options. I showed you the power of options. Amazing product to learn. You can also trade commodities. Commodities is a brilliant market. one of the very old markets. Starts at 10 in the morning, finishes at 11:30 in the night. You can trade crude oil, you can trade silver, gold, multiple kind of commodities. And this is a 95% discounted market. 95%. And here, the money that can be made here, let me show you. This is one of the trades I took in the class. I am trading, guys, in the class. That's how I teach. This is a crude oil trade. Capital requirement about 30,000 rupees. This was this novice gap that I was trading. It retraced back down here. First, it made a triple bottom, then started catching the uptrend. There was an inverted hammer. And around 6 o'clock in the evening, the move started. And, from 6 o'clock to about 9 o'clock, just 3 hours of trading, 30,000 rupees of capital, and the booked profit loss, BPL here, is 10,404 rupees. This is the potential. But if you were in the wrong direction, that would have been the loss. Now, what is the, do you have to be right here all the time? Now, let's understand a very important concept. In fact, this single concept can take you very far away into this markets. Let's take a stock like example, RS Software. If I take RS Software here, let's say on a daily chart here. Let's take somewhere here. Let's take this model. RS Software is coming down, 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 and down. And somewhere at this point here, I do my analysis and I see, that RS Software, somewhere at this level, RS Software has, made a very prominent candlestick pattern. There's a divergence seen down. Fundamental technical mismatch has happened. And I decide to buy RS Software. Now let's see. And I buy RS Softwares at 158 rupees. Now, the moment I have bought RS Softwares, am I guaranteed of a profit? Yes or no? No. I'm not guaranteed of any profit. In fact, the moment I have bought RS Software, I have just bought the risk of the market. What is my risk? My risk is from 158, it can go and become 0. That is a negative risk. Negative risk is called loss. Or from 158, it can become 500. That is called positive risk. So positive risk is called profit. So I have two possibilities into this here. My first is positive risk. This is, and on the other side, I have a negative risk. I have two possibilities, a positive risk or a negative risk. In positive risk is my comfort zone. I am into the trade for the positive risk, small profit or the big profit. My problem lies with the negative risk. I don't like the negative risk. But negative risk is a possibility. I cannot shy away from the risk. I have to do something about it. Most people shy away from their losses. So I have to accept here that there is an equal chance of being right or wrong here. And if it goes from 156 to 100 rupees, I'll have a big loss. I did not take this trade for a big loss. So the first thing I was taught is, Yogeshwar, when you go into a trade, you first plan your small loss. You first plan your small loss. And that's what I do. I said, let me plan my small loss. If I'm wrong, how much will I be wrong for? I said, this is the maximum I want to be wrong for, 149. So I decide I will not be wrong for more than 9 rupees. And I also decide my target. And I say, my target in this, let's say, is somewhere here, because this is where the move started from. So I defined my risk and I defined my, Let me make my colors right. So I defined my profit, I defined my risk here into this. I've defined this. So the first thing I see is my potential profit is much more than my potential loss. With this, what do I put here on the lower side? I put a stop loss. I put a stop loss order. What is a stop loss order? Stop loss order is an order which will take me out of the market if the move happens against me. That means if the price will come down to 149 rupees, my stocks would be sold. My stocks would be sold. But now with this setup, I have ensured that I will never have a big loss. I'm ready to accept a small loss to make sure that I never have a big loss. Now the price starts moving up. Now what is my risk? My risk in this is about 9 rupees. The price starts moving up here. Let's say this is where the price is now. Price has gone from 158 rupees where I have bought it to about 201 rupees roughly. Now answer me very carefully, guys. Has my risk increased or decreased? Write it. If you think increased, write increased. If you feel it is decreased, write decreased. This is very important for your learning. Please write. Everybody write here. Has the risk increased or decreased? I'm waiting. 90% of the people have said that my risk has decreased. It's a wrong answer, guys. It's a wrong answer. My risk has increased. Think, the first thing I had said is, you are in risk till you are out. What was my original risk? My original risk was 9 rupees of negative risk. Now let's understand this. Now, where is the price now? Price is here at about 202. This 158 to 202, this is about 44 rupees. This is about 44 rupees. So my now total risk in the system is 9 rupees of negative risk and 44 rupees of positive risk. So my total risk into the system now has become how much? It has become 44 plus 9 is 63. So my risk has increased. And my job as a trader now, I said, oh no, I'm not comfortable with so much risk. Let me bring my risk back to the original level. So what do? I move my stop loss and bring it down 9 rupees below it. Let's say I bring it to 192. Correct? Now, I've just done a simple magic. The magic is I can never lose money into this stock now. In fact, I have two components to my profits now. I have guaranteed profit. This is my guaranteed profit. I think guaranteed spelling is wrong and live with it. So guaranteed profit, and the next is virtual profit. इसको समझ डाला तो स्टॉक मार्केट झिंगल डाला. So this is my virtual profit because this belongs to the market, this belongs to me. In a worst case scenario, if it goes down at 192, I will be out of the market. I will be out of. So I'm not trying to be right. I'm trying to manage my risk. A good trader and an investor never tries to be right. He always tries to manage his risk. Trading is a business of risk management. Now, price went up and I keep on trailing it, let's say till here. Now, this is my guaranteed profit and this one is only my virtual profit left into the system here. See, now from 158 to about 206 is guaranteed profit. Now, the price has gone down, I'm out. At 206, I have booked my profit. The price again came down to the same level, and see, I can again take the same trade. Nobody stops me from taking the same trade again with the same risk, and see, it has again gone up. This is what trading is all about. Trading is about, this concept is clear, guys? Very important concept. People think you have to come here and you have to be right. No, you have to learn how to manage. As long as you do not take a big loss. If I go back to all these companies, let's say if I go back here, this one, what is the mistake the investor has done? He has taken a big loss. What is the mistake investor has done? He has taken a big loss. As long as you don't take a big loss, you will make money in this market by being wrong 40% of the time. You only need a success rate of 60%. That's all. That's all. I'll just be telling you guys. You can trade Forex futures. You can trade Forex futures. To trade, you should this. I'm very clear, guys. I only teach and train. I don't handle anybody's money. I don't give any tips. There are two ways. Either give everybody a fish to eat every day, or you teach them how to fish. I teach you how to fish so that you become financially free. So, to trade, what should you know? What to buy. You have limited money, market has unlimited opportunities. You have to know which is the high probability opportunity in which you have to put your money. When to buy. Timing is of critical importance. How much to buy. Position sizing. How much risk to take. Risk management is the key. This market will not run according to you. You will run according to the market. When to get out. Extremely important. And this is the skill set required for it. You should be good with fundamental analysis, reading balance sheets. But fundamental analysis is not only balance sheets. You have to know the product, the future of the product, the sector that you are into, the management, the vision, and how the company is with respect to the competitors, with respect to the international markets. So you should be deep into fundamental analysis. Then you should time the market with technical analysis. Technical analysis gives you the price moves. For example, my friend asked, sometimes in intraday price moves up so high after slip. So what to do at that time? You have to work with risk management. You have to learn the spreads, and you have to know what are the oscillators and the indicators doing. And it can be learned. All this can be learned. Understand, price has three components. It can go up, it can go down, and it can go sideways. It can be uptrending, downtrending, or trending in sideways. This is the direction of the price, three directions. But there is one more component of the price, which is the momentum of the price. What is momentum? Let me give an example. You're driving a car, and 100 meters ahead, you have decided to take a U-turn. Your direction will change after 100 meters. Till 100 meters, your direction will remain exactly the same. But right now, your momentum will start changing. From 80 kilometers an hour, you'll come to 70, 60, 40. From fourth gear to third gear to second gear. Your whole body language will change. And other person will only see the change of direction. But 100 meters before, you knew you are going to change. This is what oscillators and indicators do. When you learn oscillator and indicators, like there are many, there are, more than 100 oscillators and indicators, more than about 10, 15 are the main ones. They will tell you a little before with divergence and other things, by being overbought, by being oversold, that this market is about to turn now either from bottom to top or from top to bottom. And that would be a great advantage for you. And technical analysis, it is like the ECG of the doctor. You can see it, but you have to learn. This is the language. Please understand. Every profession has a language. Stock market also has a language. The language of the stock market is the language of numbers and the language of charts. Charts is pictorial language, and fundamental analysis is numeric language. So you have to learn these languages if you want to be good and you want to make money here. You should know stock filtering to find high probability trades, to find your own trade every day. Then why do you have to ask anybody for a tip? I teach you that. Risk management method, you have to be brilliant in them. You should master the online platform. These days, the day are gone when you have to, call your brokers and fill forms. Now the trading is automatic. Even if you do jobs and you want to do intraday trading, find your stocks, find your levels, find your stop loss, entry, exits, put it into the system, feed it in the night. I teach you how to do that. And then go to the office. When your price will come in the day, your trade would be executed, stop loss would be put into the system, target would be put into the system. As the price will move in your direction, as per the condition you have given, trail will happen. And, when your target is achieved, your profit would be booked. If nothing happens till 3:15, then your trade would automatically be squared off. You are absolutely safe in that. And you can even do this for swing or for positional form of trading. So be comfortable with the new plans. Learn high probability trading techniques, because this is, the different kind of markets and different techniques for different markets. Trading plan aligned to your personality. It's a business. The way you do business with a business plan, you always do trading with a trading plan. In my classes, my students, they are making a trading plan and they submit it to me. And that's how their trading goes to the next level. You should know rational decision making. If you become emotional in this market, it will kill you. You have to learn how to rationalize the market, how to do rational decision making. Taking a small loss to avoid a big loss is a rational decision. Not booking a small profit to get a big profit is also a rational decision. Money management and trade management should be learned. Managing emotions and your subconscious mind. In my classes, I pass you through meditations, deep meditations by which you can touch the alpha levels of your mind and reprogram your decision-making process. This is the critical components of trading, guys. Let me tell you about the things and mentorings that we run in Pathfinders. I do a 6 months of practical training and lifetime of mentoring for Pathfinders active traders, where I teach intraday trading, swing trading, positional trading, and long-term trading. I teach you how to make money in short terms, in a few hours, in a few days, using the derivative market, and how to create your crore rupees portfolio. I teach all the asset classes, guys. I teach stocks, stock futures and options, index futures and options, commodity futures, and also the Forex futures. All asset classes are taught in this class. The typical batch size, about 25 to 30 students. The courses are conducted on location for people who are from Mumbai, and there are also online courses for people who are from outside Mumbai. Both of these are available. So these are the people who have passed out in the last 2.5 years from Pathfinders. So all kind of people come here, old, young, ladies, gents, doctor, engineers. And you see, Mr. Singh here, he's 77 years old. And if you say, if he can learn it, well, everybody of you can learn it. So this is some of the students that have passed out, just showing you the classes that have passed out in the last 2.5. More than 1,000 students have passed out, guys. There's a last batch that passed out in July from Thane in Mumbai. And you see almost 9 ladies in this, old people, young. So all kind of people come and learn. And, it feels great if you can take control of your financial freedom in your own hands, guys. This is the course content, right from the very basic, from the very start, from the very advanced, I take it. How much should you before you join the course? Zero, nothing. I start my training from absolute zero. I imagine that you won't, and courses are conducted in both languages, English and Hindi, so language is not a barrier. And I start from absolute zero. Here in this training, though, I will be using some technical terms, but in the class, I start from absolutely zero. What is a stock? What is a company? What is a price? What is open? What is high? So very basic, I'll be starting. All this course content is available on my website, guys. You can read it in detail there. All the 10 critical components are covered. Marked in blue is live trading. In our classes, what people like the most is the live trading that I do. In every class, I live trade real money. In the last class that I did in Thane, on a single day intraday trading, I did a turnover of about 87 lakh rupees. In my intraday trading classes, about 50 lakh to a crore is the normal turnover I do in a single day. No paper trading, nothing. So let me tell you the format of the on-location classes, then I'll also tell you about the online classes, guys. So the format of the on-location classes, first there is 4 days of classroom training. So the 4 days of classroom training is always Saturday, Sunday, Monday, and Tuesday. Saturday, Sunday, the market is closed. So Saturday, Sunday, I teach you the concepts, method, techniques. Then Monday morning when the market opens, Monday is for intraday trading. Whatever I have taught you, I will trade in front of you with real money, my money. I will take a few lakh rupees and I'll show you how you can do turnover of 50 lakh to a crore rupees with that, and how you will work with risk management, how to put a stop loss, how to book profit, how to book losses. All this will be taught to you, in these 4 days. So Monday is for intraday trading. Then Tuesday, I will be for positional trading and portfolio building. On Tuesday, I'll teach you how to build portfolios and how to create long-term wealth, how to choose your stock, how to pick your stock, how to time them well. And I'll be taking trades in all the markets. I'll be trading stocks, I'll be trading stock futures, index futures, commodity futures, options, and Forex. All kind of trades I'll be taking in these 2 days. So first 4 days of classroom training. Classroom training happens in Mumbai, in Thane, and in Andheri. In Andheri, it happens in Carl Residency Hotel, and in Thane, it happens in Satkar Residency Hotel. You can attend in any of them. Then you make a trading plan as per my guidance, and a trading plan sent to you. Those who are from Bangalore, I'll be telling you about the online courses soon, guys. Please have a little patience. By the way, many people come all the way to Bombay to attend. This time, 4 people coming from Hyderabad. So, online training, this is the backbone of my course, 6 months of online training. This is 6 months of online training. That is the backbone of my course. This will give you the revisions and this. What is skill? Skill is, transfer of knowledge from conscious mind to subconscious mind by practice, and practice. So there is 6 months of online training like this, which will happen every Thursday, 9 to 11 in the night. I purposely kept it in the night so that your day job is not affected. So everything that I have taught in 4 days will be revised, plus advanced concepts would be given. So, and all the online training sessions are recorded the way this session is being recorded. And after the live training, the recorded session would also be sent to you, which would be in the system for full 1 week. And you can listen to it as many times as you want. So there would be 6 months of online training. In the online training, in a whole month, there would be 3 learning sessions and there would be 1 practice session. The most dangerous day of the month is considered the expiry day, the last Thursday of the month when the contracts expire. That is considered the most volatile, the most risky day. I will give you practice on that day only. Because if you can survive that day, you can make money on any other day. So every last Thursday of the month from 11:30 in the morning till 3:30 in the afternoon, there would be a, live trading practice where you will trade with me under guidance. I'll tell you what to buy. You will buy with me, we'll put stop losses, we'll book targets, and you will get 6 practice sessions in these 6 months. There will be 6 practice sessions that you will be getting. So this monthly practice that happens every last Thursday a month from 11:30 to 3:30. Then people who are Pathfinder's active traders. So Pathfinder's active traders, people who want to trade under me, who says, yes, I want you as my mentor. For them, there is a lifetime of mentoring that happens every Thursday from 11 to 12, in which I also do live trading. I take trades. I find a trade of the day. In this session, I answer your queries, give my views of the market. We find a good trade and we take a good trade here. Okay. Let me finish, guys. I'll take your questions. Just let me finish. Then I'll take 5 minutes for question answers. Let me tell you about the course first. So this is the format of the 6 months training, 4 days of classroom training. For that, you have to come to Mumbai, either in Andheri or in Thane. Then there's 6 months of online training, which you can attend from your home. Then 6 months of trading practice, which is also online. Please understand, except these 4 days, everything else is online. Same way that you are listening to me now. Then those who want to come and meet me, you can come and meet me in my office. From Tuesday to Friday, 4 to 5:30, I have reserved for my students who can take appointment, come and meet me for their queries. If you're from outside Mumbai, you can give me a call and I'll be happy to answer your queries. Then there's a lifetime of mentoring for pathfinders, active traders, guys. This is the format of the course. And those who later on want to become serious traders, we also have online and physical trading rooms where there is a live trading that happens every day. After the training, make money with intraday trading, catch moves with swing trading, build and manage your own portfolio, trade leverage assets like options, make money when price goes down, and you're going to earn about 25 to 50% per year on your stock portfolio. These are the, and you do this on your own strength, not by being dependent on others, on your own. That is the key. This is the course fees, guys. 26,000 rupees service tax for the 6 months training and lifetime of mentoring, covers everything. This is the course fees for 3 months of online training, 20,000 rupees plus service tax. The only difference in the physical trading and the online trading is, in physical trading, it is 6 months. In online, it is 3 months. In physical training, is 4 days of on-location training. In online, we send you 2 days of recordings, which you can listen at your convenience. Everything else is exactly the same. So the physical is 26,000 rupees plus service tax, and online is 20,000 rupees plus service tax. Are the upcoming training schedules? Please note them, guys. The seats are always limited. So I don't take more than 25, 30 people, and there's a training happens every month. So Andheri batch is starting on 15th of August. Online training batch is starting on, not 15th, this is 22nd August. Let me correct it. This is not correct. This is, so the Andheri batch is starting 15th of August, online batch is starting from 22nd of August, and Thane batch is starting on 5th of September. You can join any of that. You can pay any way you want, cash, check, credit card, debit card, or you can also do online transfer on our website, guys. So these are the courses that are there and the dates, guys. So more than happy to train you. And if you want to achieve financial freedom, if you want to build your own portfolio, you will have to take control in your own hands. You don't have to pay me now, but if you want to do the course, just say yes. If I say yes, I know you guys are interested in doing the course, and somebody later on will contact you. Just say yes. Don't have to pay anything right now. Your yes is good enough for me, and Dhamishta, our education manager, will call you later. Just write yes here. Great to see so many yeses here. Great guys here. I'll also give you Dhamishta's number. So want to contact her, they can contact her. So I'll just write her number. So those who want to book their seat, you can also call her directly. She'll call you back anyway. Okay. This is her number, guys. Her name is Dhamishta. She's our education manager here. So you can note her number. 9022330009. Let me write here. So that's her number. Her name is Dhamishta. I'll write it. After you do the course, you get my personal number, and I'm in personal touch with you. Okay, you can call her to book your seats online or on location, guys. So just any questions you have, please ask me now. I'll be more than happy to answer your queries now. I hope this 2 hours of session was of use to you. I'll be sending you a recording, so if somebody didn't hear me properly, that is absolutely okay. Yeah. Any questions, any queries, guys? Somebody had questions? Feel free to ask a question. Don't ask me for tips. Tata Motors trend. Don't ask me about the course, class, content. The practical classes in the hotel also and online also, both are practical. And the content is the same. In online and in the 3 months and 6 months, the content is the same. In 3 months training, let me tell one more thing. In 3 months training, you get 2 trainings. In addition to the Thursday session, you also get a recorded session on a Saturday. So the content remains exactly the same. The fees for physical classes in the hotel is 26,000 rupees plus service tax. So it is 4 days in the hotel plus 6 months online plus trading practice every day. Okay, somebody asked, is it possible to take coaching? This is for working people only. In fact, we know that 90% of the people who come into classes are working people. The only thing you have to take is a 2-day holiday on a Monday and a Tuesday. Everything else I've designed in such a way, like Saturday, Sunday is a holiday for most of the people. All the online classes are in the night. Tax is 14%. Tax is 14%. You can even go on the website here. It's very simple. For example, this is the website here. You can go here and let's say if you, let's just answer one guy's question here. Just do a registration. It is free. And then log in with this. Just log in with this one. Once you are log in here, you can go to the training, you can go to the paid training. And let's say you want to buy a training, you can buy online. Just a minute, guys, I'm asking. And it'll take you to this checkout here. Do the checkout. Fill in your details. It's very simple. Click on continue. Do this and then just click on confirm here. And it'll take you to the payment gateway. You can pay by credit card, debit card, via net banking, cash card, anything you can pay for. It's very easy. Online program is scheduled from 22nd, but online program you can actually start from any time you want. Because the 2 days of recording we can send you at your convenience. Okay, how much capital required to start is the question of Amit. As less as possible. In the start, till your skill is not developed, I would suggest you start with less capital, maybe 25, 30,000, not more than that. Is there any difference in content in the 4 days and the online? No, sir. There's no difference in the content, Sanjay. Absolutely the same content. In the online also, the training remains the same. Only thing is in online, you get 2 sessions per week. And in the 6 months, you get it every Thursday. Yeah. On the website, it is with service tax. If you go on the website here, this is the figure with service here. If I go here on the website here, on this one, and go to the paid trainings. So this figure of 29,650 is 26,000 plus 14% service tax. And this 22,800 is 20,000 plus service tax of 14%, guys. Okay, Shashi Kumar, after 6 months, any support? Yes, sir. Support is there for life. Those who are active traders with me, those who trade under me, there is a session that happens every Thursday, 11 to 12, and the session is taken by. Yeah, you need to have a demat account. You can open it with any broker. You can open it with Sher Khan, Motilal, whatever broker. That's your choice. Okay, guys, you have Dharmishta's number. Please call her if you want to book your seat. The number I have given you. So just call her. Do you provide any certificate? You can take a certification, but certification is not our focus. Our focus is to make you a trader. Active traders is mean a trader who's actively trading, who has account with we have a tie-up with Sher Khan. So I like their software. So those are trading with Sher Khan. For me, that is an active trader. I can see his accounts, and he gets a lifetime of mentoring. No, for Forex, you don't need to have a separate demat. Sher Khan Trader itself, you can have Forex at when you're buying here. For example, I buy, say, on this one, if you are adding, if I say add script, equities, derivatives, Forex, and commodities are on the same platform. No. Okay, this is a very important question. Somebody say, in between training, could I trade or I have to wait? No, you don't have to wait to finish your course. Your trading will start after about 10 days. After about 10 days, you can start trading. You don't have to wait 3 months or 6 months to start trading. Trading starts immediately after your 2 days or 4 days finishes. But in the start, you start with less capital, and later on you can, have more capital. Yeah, for online, you can apply for a training anytime, actually. Do you cover global? No, I don't cover global Forex. International Forex is illegal in India, guys. But the principles will remain the same. The principles that are used in Indian Forex are the same principle that you use to do a Euro USD. So strategies would be the same. You can use my strategies anywhere, guys. These are not my strategies. These are strategies of traders all over the world that I have Indianized, guys. Yeah. Somebody says, can I have it as a second source of income? Absolutely, Vinod. While doing your job, I said, when you do portfolio building, 25 to 50% a year. When you're doing derivatives, about 10% a month, you can expect from your capital with risk management. Okay, guys, I had a nice session. Thank you very much. You guys were so nice. And I hope I could add some value to your 2 hours. Many of you have said yes. So I look forward to see you into the classes online or on location. And thank you much, and have a great weekend and a good Sunday. Bye-bye.